people often readily accept information, particularly in financial matters. Therefore, it's wise to exercise caution and make choices that align with your long-term goals. This is precisely the course of action China is pursuing, a strategy viewed as astute and courageous by some, while others see it as less daring. Today, we'll provide insights into how China has embarked on a bold strategy of exchanging US Treasuries for substantial gold acquisitions as confidence in the US dollar diminishes. Welcome, fellow money magicians, to Nova Society, your ultimate destination for personal finance. In case you haven't subscribed yet, let's make it official and join forces. Two of the three largest foreign holders of US Treasuries, namely China and Japan, have been consistently divesting their US Treasury holdings over the past month. Currently, their holdings are at the lowest levels witnessed in decades. While there are several reasons that have contributed to the collective actions of foreign countries, which own approximately one-third of the US debt, a clear underlying sentiment emerges from their actions, a desire to distance themselves from the United States dollar. While it's essential to recognize that the process of a global reserve currency losing its preeminent status is not an instant one, it's evident that the initial stages of this transformation are already underway. This gradual shift is significantly influenced by Saudi Arabia, a pivotal global player that has adjusted its oil transactions to involve China, currently the world's largest crude oil importer, and has embraced the Chinese yuan as the primary medium of exchange. Moreover, other nations, including Brazil, China, and India, have taken a proactive stance by opting to engage in trade activities utilizing alternative currencies. This deliberate move underscores their growing inclination to reduce their dependence on the fiat US dollar as a dominant currency for international transactions. The culmination of these actions represents a noteworthy and substantial adjustment in the global financial landscape, and although the complete transition may take time, it underscores a clear trend away from the historical reliance on the US dollar. China and Japan, the largest US debt holders, have also actively engaged in repatriating their capital, seeking safer assets for investments in times characterized by severe economic hardships and uncertainties. During such periods, precious metals, particularly gold and silver, emerge as the safest stores of value. Nations not aligned with the Western sphere of influence are swiftly learning this rule. Consequently, it comes as no surprise that China has been accumulating a good amount of gold in recent months, achieving unprecedented milestones in their precious metals reserves. Before delving further into the topic, let's take a moment to review the numerical data, shedding light on the rapid transformation in the status of US Treasuries from being considered completely safe investments. From 2018 to June 30, 2023, China's holdings of US Treasuries have experienced a notable decline, amounting to roughly 30%. By the end of June, China's US Treasury holdings decreased to $835 billion, marking a new low not witnessed in the past 14 years. While it is true that China has been gradually divesting from US Treasuries over the course of a decade, what merits attention and raises concerns is the recent acceleration in the rate of these divestments. In a matter of a few weeks, Beijing managed to offload 10% of its entire US Treasury holdings, sustaining this reduction for the third consecutive month. A few weeks ago, in August, an official from China's central bank expressed the growing importance of safeguarding Chinese holdings, emphasizing the geopolitical significance of this matter. It comes as no surprise that as tensions escalate between China and Western nations, China finds fewer incentives to maintain substantial holdings of American debt. Japan's substantial holdings of US debt have reached historical levels. Given recent developments, Japanese investors are likely to withdraw even more funds from the US Treasury market. This trend gained momentum after the United States imposed sanctions on Russia's reserves. The growing unease and geopolitical intricacies make the retention of these US Treasuries an increasingly precarious proposition. The assessment of China's strategic decisions to accumulate substantial gold reserves and diversify its holdings takes on heightened significance in light of these evolving dynamics in the realm of global finance and diplomacy. It's hardly surprising that countries like China and Saudi Arabia, which have reduced their exposure to Australia by 40% as of August, are now making extensive efforts to safeguard their capital. They are actively divesting from US Treasuries to regain control of their assets. So, where are these nations choosing to invest their capital? China has been making unprecedented purchases of gold. The People's Bank of China has been increasing its gold holdings more than ever before, marking the 10th consecutive month of such acquisitions. China has been at the forefront of central banks buying gold in recent months. Their primary objective is to diversify their reserves due to mounting economic and geopolitical risks. China has added nearly 7 million ounces to its gold reserves, pushing the country's official gold holdings to a new all-time high. According to an analyst at the financial trading platform FXTM, it's highly likely that the People's Bank of China, the nation's central bank, will further bolster its gold reserves. As China reduces its U.S. debt holdings, it seeks to increase investments in other assets, and gold is considered a rare and high-quality credit asset in the current economic landscape. The ongoing transition away from the U.S. dollar undeniably undermines its strength. As foreign debt holders continue to divest from their U.S. Treasuries, and with the Federal Reserve consistently introducing record amounts of its debt to the market each month, it is foreseeable that the current global reserve currency will gradually lose its attractiveness and, consequently, weaken. The apprehension of potential sanctions has become a significant concern for foreign nations, driving the momentum towards distancing from the US dollar and leaning towards bolstering their gold reserves. This strategic shift has been anticipated by several central banks. For instance, a recent survey conducted by the World Gold Council revealed that the majority of central banks foresee that reserves denominated in US dollars will decrease to 40 to 50% within the next 5 years. However, here's the intriguing part: the same survey indicates that 7 out of 10 central banks anticipate an increase in their gold reserves over the next 12 months. According to their survey for 2023, 24% of central banks have expressed their intent to augment their gold reserves within the upcoming year. In addition to this, the perceptions of central banks regarding the future role of the US dollar appear less optimistic compared to prior surveys. On the contrary, their outlook on gold's future role has become increasingly favorable, with 62% stating that gold will constitute a larger portion of their total reserves, in contrast to 46% from the previous year. As highlighted by a report in the Global Times, the worldwide phenomenon of de-dollarization is steadily gaining momentum, and the current upswing in gold investments displays no indications of decrease. Experts anticipate that this trend will continue in the months to come. The overarching theme of de-dollarization plays a pivotal role in propelling central banks across the globe to augment their gold reserves. The idea behind this strategic shift is for central banks to effectively address external risks, many of which are subject to influences beyond their control. By diversifying their holdings into precious metals like gold, central banks are essentially building a safeguard against the unpredictability and vulnerabilities inherent in today's global economic landscape. This pragmatic approach aims to insulate their economies from the repercussions of international financial fluctuations and geopolitical pressures, thereby enhancing their overall financial resilience and independence. As central banks adapt to this shifting paradigm of financial prudence, the emphasis on bolstering their gold holdings is expected to persist as a cornerstone of their strategies for safeguarding economic stability in an increasingly uncertain world. Many individuals have found precious metals to be valuable assets. These metals serve as a financial safety net, as they can be used as collateral in emergencies. A notable example is gold, which tends to exhibit a consistent upward trend in value over time. It appears that China's decision to amass these precious metals may indeed have been a prudent choice. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.